let's talk about a high-stakes geopolitical game that's totally reshaping the world of energy. It's a game with three main players. You've got a fallen giant, a quiet neighbor, and a superpower that's pulling all the strings.
Okay, so to understand this, our story is going to start not in the past, but with a hypothetical shockwave from the very near future. We're talking about an event that seems like it's just a local story, but actually sends tremors thousands of miles north.
So just imagine this for a second. This breaking news alert flashes across your screen. Venezuela's president, Nicolás Maduro, has just been arrested. And then, at a press conference, the United States announces it's going to take over and restructure Venezuela's colossal but totally crippled oil industry. Now, this might look like just another political story, but what's really happening here is a rewriting of the rules of energy.
And the very first clue that this is way more than just some regional drama, it comes just 2 days later, the first trading day of the year. And the Canadian energy market, it just reacts violently.
And when I say violent, I mean it. We're talking about a 4.5% plunge in the energy index on the Toronto Stock Exchange. Now that is not just a dip, okay? That is full-blown panic. You've got investors just dumping shares in Canada's most vital industry.
So, this is the big question, right? What is this invisible string that's connecting a political crisis down in the Caribbean to a financial crash all the way up in Canada? Well, the answer lies in an energy triangle that's been around for about a century. To really see how this whole relationship was built, we've got to rewind the clock and take a look at the original connection between Venezuela and the United States. You know, geologically speaking, Venezuela is one of the wealthiest nations on Earth. I mean, it is sitting on 300 billion barrels of proven oil reserves. That's more than Saudi Arabia, more than anyone. But it's not just the sheer volume of oil, it's the location. From Venezuela's Lake Maracaibo to the huge refining hub on the US Gulf Coast, it's a short, direct trip. There are no choke points, no long, vulnerable pipelines. And for decades, this is what made Venezuela the perfect spare fuel tank for the United States. It fueled the Allies in World War II and powered America's post-war boom. Okay, but here's the crucial technical detail. Venezuelan oil isn't the light, sweet crude you might be thinking of. Nope. This stuff is extra heavy, literally as thick as asphalt. It's really difficult to get out of the ground, and you need very specific, very expensive refineries to process it. And that specific type of oil, that is the key to this entire story. All right, now let's fast forward. Over the course of 2 decades, Venezuela systematically dismantled its own golden goose. And as it did, a quiet neighbor to the north stepped right in to fill the void. You know, Venezuela's decline was really a self-inflicted tragedy. It starts in 2002, when Hugo Chavez fires 18,000 skilled workers from the state oil company. These were the experts, the engineers, the geologists who actually knew how to handle that complex, heavy crude. Then the US shale revolution comes along and crashes prices. And then crippling sanctions cut off the essential chemicals they needed to even move the heavy oil. So Venezuela was just left sitting on this treasure that it couldn't sell. If you go back to 1995, the story was simple. When American refineries needed heavy crude, their #1 call was to Venezuela. They completely, utterly dominated the market. And this chart right here, this illustrates what we're calling the Great Substitution. By 2023, Venezuela's share is basically zero. And Canada? Canada filled that gap and then some. It came to dominate the market, supplying a staggering 60% of all US crude imports. And here's the most important part. This wasn't just any replacement. The oil from Canada's oil sands is chemically almost identical to Venezuela's. It's the same extra heavy crude, and it's processed by the exact same specialized refineries on the US Gulf Coast. So Canada became the new, reliable supplier of the exact same product. Okay, so this brings us right back to our future scenario in 2026. With Canada now being the sole dominant supplier, why on earth would the US bother trying to revive a broken Venezuela? Well, the answer is pretty simple. It's not about volume. The US doesn't need more oil. What it needs is leverage. See, by having only one major supplier for the specific type of crude, Canada holds a really powerful strategic position. So the US move is designed to reintroduce a competitor that it can control, and by doing that, weaken Canada's hand. There's a great analogy for this. Think of Venezuela as a destitute noble. He's sitting on a treasure chest, but he's lost the key. Canada is the hardworking foreman who stepped in to supply the landlord, that's the US, And now the landlord is helping that noble find his key, not out of charity, but to make sure the foreman's prices don't get too high. It's all about regaining control of the supply chain. So what does this new reality actually mean for Canada? Well, the return of a direct competitor puts the country in an incredibly difficult position. It creates pressure from 4 different angles. First, its pricing power just evaporates. U.S. refineries can now play Canada and Venezuela against each other, demanding a bigger discount. Second, purchasing contracts are going to be split, squeezing Canada's market share. Third, the investment climate gets pretty chilly. I mean, why would you fund expensive, long-term oil sands projects if cheaper Venezuelan crude is coming back online? And finally, Canada's political leverage, its trump card as the most stable supplier, is significantly weakened in any future negotiation.
Look, this isn't a death knell for Canada, not at all, but it is a massive pressure test. The game has changed, and Canada is now in a race against the clock to adapt. Venezuela's industry can't be fixed overnight. It's been absolutely decimated. Rebuilding its fields, its pipelines, its power grids, that's going to take billions of dollars and at least 3 to 4 years. And that right there, that is Canada's strategic window to act. So what's the pivot? What do you do? Well, first, you sell certainty. You lock U.S. refineries into long-term contracts that are just too stable and reliable to break. Second, you diversify. The new TMX pipeline to the Pacific coast lets Canada sell to Asia, proving to the U.S. that it has other customers. And third, you turn your environmental regulations from a cost into a competitive advantage, marketing your oil as the most ESG-compliant heavy crude on the market. At the end of the day, the U.S. move on Venezuela forces Canada to evolve from just being a simple resource supplier into a truly strategic energy power. It really proves that in this new global order, geographic luck just isn't enough. Lasting advantage only belongs to those who can build real resilience and strategy around their resources. So what do you think the future holds for this energy triangle?